Hi, good evening, guys. Hope everyone had a good weekend. I want to start this one off with kind of data this week, and then show you guys some other data sets via Tradietics. But I wanted to preface, I guess, first and foremost, just that this has been a hard month, guys. So if you guys have been struggling, it's okay. It's happening pretty much across the board for a lot of other talented traders, myself. So if you guys are feeling like this month has been difficult, it's because it has. So it's important to acknowledge that and really kind of dilute down what you trade. And I've said it before too, just having cash on hand is really big, and limiting downside as much as possible. Um, and it sucks because, right, we had a really good 2 month heater, right, where I felt like I really couldn't miss. I had a really good pulse on the market. And then to start off February, we had a lot of these distribution schematics that looked A plus, and they gave us a little bit of a taste of it, right? NVIDIA was the primary one where we had that crazy gap down via DeepSeek. SPY, CPI sold us off, and they really started to retrace back up on low volume to give us an opportunity to size in again, or add full size onto these trades. And really, it just made its way all the way back up. SPY notoriously went right back to its highs. It kind of broke those lower high trend line. I don't really trade trend lines, as you guys know, but it broke those consecutive lower highs, and it's right at the highs again. NVIDIA kind of pushed beyond that 618 into the DeepSeek gap a little bit further. And I told you guys, right? I mean, it's very, very difficult to short right now. It feels like anytime you get some kind of continuation set up on the short side, it ends up gapping up the following day, or with like an inside bar, and then it just continues back to the upside. And it doesn't have to make sense, right? We've talked about this a lot. There's a lot of news sets or news pieces that are coming out overnight. There's a lot of reason for big money to pivot once these sells occur and just buying the dip. Remember, dip buys or any kind of accumulation doesn't have to be a base, right? Like a distribution does. Distribution, it takes a long time to find hands to kind of change with, to be able to sell your full position. Whereas buying, right, it's a little bit easier. And these end up becoming events where you'll have some kind of gap down or some kind of crazy news, and it's really easy to get fills on those, and then kind of extend the market higher. And that's really what we've been seeing. And I showed you guys the screenshot. I talked to Chem Carson, if you guys don't know him, kind of frequently, and he just said something that resonated with me, right? The short is always hard, longs are always easy, and it's so simple, but it's so true, and you can really feel it with the premium movement right now. And it's awesome to catch a short side trade. It feels good, they pay really well, but it's just increasingly difficult, and it's getting to the point now where we're seeing a lot of potential for the upside still. I've talked about how I think the Fed could potentially pivot and cut rates, although Powell did take a stand against that, as we saw during FOMC, where he said he's going to remain independent from the administration. But right, I talked about this too, and I know some people don't like it, but if I told you, if Doge finds some kind of money in the Treasury that they can essentially lower the debt with, or not lower the debt with, but you guys kind of get it, right? That we can find that we don't have as much debt as said, right? We can then kind of print that money off and then use that to stimulate the economy again. Usually that goes into the market. The market is really what helps the economy. It's kind of a trickle effect. I think they were estimating like 12 trillion, even 2 trillion would be a massive amount. But yeah, if we can see that, right, and then that leads into cuts, that's a little speculative kind of getting into that. But there's just a lot of headlines that are kind of pushing this higher and higher, and it just seems like any bad news is just bought up. And the tariff stuff is kind of just shrugged off, and it almost feels like they're front running, yeah, a cut. They're getting in right now and preparing for a big move up. So with that being said, I mean, short side is just kind of off the table for me. I mentioned it in the daily recap video that if the market does sell, hey, I mean, I'll just sit back and just enjoy it, maybe catch a little bit of it. I won't have a top tick or anything like that or major size, but for the most part, if the market sells, I just think it's an opportunity to buy the dip, right? And I've talked about MU a lot, AMD a lot, Google, Nike, just a lot of these names, and I'll talk about them as well as we kind of make our way through this video. But I really think it's an opportunity to just long into like summer, right? Take shares, things like that, kind of building off going into that March OPEX and beyond. So with that being said, this is the economic calendar this week. It's kind of a dry week. We do have obviously Monday off. It's President's Day, so just enjoy tomorrow with having the day off. I still would prep your charts and get everything ready to go on Tuesday. And on Tuesday, it's tentative, as you guys can see, so we don't really know the time or if it's even going to happen. But President Trump is slotted to potentially speak on Tuesday, so that will be fun. There's always something that happens with him. Wednesday, we have FOMC minutes, so it's not the actual FOMC. I know a lot of people get that confused. It's just kind of like a cliff note of what was previously said in the prior, or I guess during the actual Fed meeting, and that's released to the public and why they came to their decision. And then Thursday, we have unemployment claims, which is usually, kind of a nothing burger, but it will be interesting to see kind of the numbers. And you guys know me. I'm not a conspiracy theorist, but I have been saying for a while I think the numbers have been a little fudged from an economic standpoint, and we're starting to see the real numbers. And that's, you guys can completely disagree with me, but if you guys go look at PPI and CPI, the jump on that was absolutely insane, right? And if you go buy groceries, you guys kind of live in the real world, you'll see that inflation really never came down. It's always been high, right? So pretty dramatic jump. I really encourage you guys to go take a look at that data. I don't want to get political, or if you guys want to go look, go look. It's really easy to find on the internet. But the jump on that was pretty crazy. So I'm actually paying attention to data sets now. CPI, PPI, unemployment. I'm looking at all those non-farm payrolls, and the JOLTS job report's going to be massive next week, so I'll be looking at that as well. But usually unemployment claims I don't pay attention to, but I will be looking at that on Thursday, which is at 8:30, and then Friday we have PMI. So not the craziest data week, obviously stuff to pay attention to, just going into the following day. If you're heavy, maybe size down, or make sure you have longer dated contracts. That always helps out as well, having cash on hand to be able to participate in any dips that occur from that, or if you guys want to fade the rally, whatever, right? Just play it smart. But that's pretty much it for the econ side of things. Let's jump into, I know a lot of people like the dark pool side of things. We'll jump into the actual dealer Greeks here. I don't want to create too much bias here, but pretty interesting week. We do need to see 214 drop off. This is like the prior Friday, so this hasn't dropped off yet because the market hasn't opened. But we know that 221 is obviously an OPEX. This is a very big one as well. Obviously the March one's the biggest in relation between the two, but 221 is a big OPEX. We have VIXpiration on Wednesday, so that's some more volatility that's going to be kind of pressed into this week, so I'd be curious to see what happens on Wednesday. But really, right, this is another call saturated week, so once again, it doesn't mean it's going to happen, but and these can be rolled, but it's not like a January or December OPEX. But it's technically bullish, right? So I could see kind of a rally at the beginning of the week, a potential sell-off end of the week. Remember, they're long call, long equity, short put. So a little interesting here. Or actually, no, yeah, that's right. Long call, long equity, short put. So end of the week, we could see a sell-off via equity to kind of de-risk their portfolios. Doesn't always have to happen that way. Like I said, they can roll, but this is a call saturated OPEX, so something to keep in mind. Once again, here we had the bearish delta, right? So delta positive. The market did see a little bit of a dip, and then we had this like small, like sloping distribution that we were kind of a part of as we had our delta positive start to kind of build up, and then it dissipated, and now we are delta negative, right? So dealers are now flipping long, which is very interesting. I don't know if they necessarily buy at the highs, and we might get a dip that's buyable. But really interesting here if we take a look at our gamma exposure via strikes, right? So this week we have delta positive levels at 613, 614, 615, 616, right? So delta positive levels, remember, as we push to these levels, they're going to be selling equity at these spots, right? So you have to almost view 613, 14, 15, 16 as like a resistance that will take a little bit of time to chisel through. But if we can kind of get through that, we have the potential to get to 617. But really, you guys can see a lot of the premium build out and a lot of the gamma exposure is to the downside, right? So we have potential for a gamma ramp down. And I don't think it's going to go all the way to 590. Really, 605 and 606 are kind of the mark I'm looking at. Maybe 600 on the low end. But very interesting kind of build out here from a gamma perspective, right? And if we tie this into our, I mean, I guess I can just show you guys too. If we go to the actual expiration itself, you can choose the dates on here, kind of filter this down. Like I said, pretty big resistance here at 615. You can see 614 is a big spot, but if we can get through 615, 617 is for sure on the table in my opinion, so kind of like a break and base over 615. You can maybe trade this to 617. But in our general range, right, we could potentially slip down into 606. We have potential support at 605. If we lose 605, 604, easy meltdown in my opinion to like 599, 600. So just something to watch. There might be a day trade available on this one. We have a really, really nice lucrative range as you guys can see, right? I don't really favor the call side as much. Maybe if we base 615, I'll look for 617 calls. But for the most part, maybe a scalp to the downside at 600 and then buy the dip on that on applicable names. But very interesting here. And then if we tie that into our dark pools, like I said, pretty barren, right? We kind of just slow grinded up into these sellers up here at 609, 610, and we're now kind of like flagging on this one. And we have kind of like a ghost zone all the way below us down into 606, 605, right? So kind of matches our gamma. A lot of bidders down below. So if this kind of stalls out, there's reason to believe that this could sell, especially with the right news catalyst or whatever ends up happening, right? Our aggregate level here, so the largest amount is at 60150, so that kind of aligns for a potential big pull down into 600. If we take a look at what 600 is, right around 1.2. There's a lot, guys. I don't want to do the math on this one. There's a lot of money that's sitting down below. So not saying I'm bearish, right? I mean, there's just potential here for a scalp down into the 600, 605 mark if it ends up showing its hand. And that's really it for this. I'm not, like I said, I'm not trying to create a bias, but also at the same time, UVXY calls kind of came in. There was this pretty notable print that came in on VIX, right, for March 18th. So kind of going into that March OPEX, someone's bought 29 calls, 58 cents per 10 orders. 10 orders usually is pretty accurate and kind of giving some kind of directionality, but some good VIX buyers out there, so expecting volatility. This doesn't always mean downside, right? We've talked about this. There could be a Fed injection or something happens where the market is stimulated, right, and that creates volatility, so that could be a move, right? Remember, these aren't always linear. Doesn't mean up or down. This could be just betting on vol, right? So there could be a sell-off. There could be geopolitical news. There could be stimulus that's injected into the market, the Fed cuts, whatever may happen, right? This is trying to kind of predict that. So interesting little setup that we have there in relation to all three data sets that I kind of pointed out. Now let's jump into some charts really quickly. Okay, just starting with SPY, we'll keep it simple. You guys obviously know, right? We were kind of short off of this kind of lower high range. We ended up breaking down. We kind of swept underneath this engulfing candle here from 2.7. And then really, right, we can use our trend line, right? We don't use it to trade necessarily, but we got this trend line break. Remember our lower highs that we're consecutively printing. We broke this on Thursday, and then we closed at the highs on Friday, albeit very, very low volume. We've seen some pretty anemic volume this entire rally up. But yeah, very, very interesting on where it closed. Technically, you know, you could call this like a spinning top, a doji, whatever you guys want to call it. I really don't view it as too much because the volume's so low here. But once again, right, kind of just using our data that we have, if we get some kind of breakout over this spot here, right, and pull back on a 610, I could see this going up to that 615 mark and then that 617 mark, as I've mentioned before. But we should expect some kind of resistance into this spot. And like I said, like it'll be hard to chisel through it. I wouldn't expect a straight shot. If it does get a straight shot above, I would expect some kind of retest here. But you guys can easily just kind of put targets here at 615. 617 if you guys want to trade the breakout. That's entirely up to you, so you can just mark it like that. But really, guys, we've talked about this. The aggregate level here in terms of dark pool is that push back down into this 600 level. That's why I have it marked. This is the majority of your dark pool buyers or your bidders. We also know 605 was a big spot, so you can put, oh, sorry, it's like right here, isn't it? Yeah, like right there. Which is the previous open from Thursday. So those are the two spots if you're going to be targeting downside. Like I said, guys, I really think that if the market is going to rally going into these red lines, by the way, if you guys don't have this on Thinkorswim or whatever, these are your Friday expirations. So these are your OPEXs. So we have OPEX obviously on 221, and then the major one is 317, right? Or no, 321. So I really think that the pathway here is a sell-off in between this OPEX into this OPEX, and then we get some kind of stimulation and then a markup all the way into like April or May, right? One of these two. I think that's the pathway here. So if there is going to be a sell-off, guys, I really do think it comes between these two OPEXs here. So I like I said, I'm not abandoning the short thesis entirely on SPY. It'll be a scalp. It won't be a massive position, but I am definitely watching this to see if we get some kind of decline in this range, right? And then whatever ends up being the bottom in this range, kind of leading into this spot here, my plan is to long the shit out of this going into either April or May OPEX, right? I think we get something like that. So just some data sets that I wanted to bring up. If we were to catch the short side, like I said, I do think this comes to 605, maybe bounces, maybe comes back down to 600. Could just chop here, right? It doesn't have to just sell all the way down. And then from here, maybe we start to get some kind of a rally all the way back up, right, for a new high. But yeah, that's what I'm expecting. You guys can go back and look at the track history. I've been saying I do think that we sell in this little pocket here for a while now, and then kind of rally from here to here, right, somewhere on that second bubble. But just kind of the levels that I have there. It doesn't have to be super sophisticated. It doesn't have to be overwhelming. Very, very simple. I would prefer the downside, right? I've talked about that a lot. I think it would just make it a whole lot easier to kind of reset risk to reward. But yeah, that's pretty much it for that. Let's take a look at some of my other setups that I like. I know I mentioned in the chat that there's a couple that I'm going to add. They're still familiar. But yeah, we're going to take a look at a couple of them. Yeah, the old familiar one here, Nike. Hopefully you guys aren't exhausted by me talking about this name. It's just never given me the criteria that I wanted for an entry. And a lot of this is really based off of this green line, right? And if you guys remember this green line, it may just look random, but it really ties back into one of the old unfilled gaps from COVID, right? I've been talking about this chart for like 6 months now, so this shouldn't be unfamiliar. But yeah, back on 324, one of the only unfilled gaps on this chart, at least one of the more applicable ones, and really gapped down to this one. We had a 3 lower low accumulation. You guys remember we kind of popped and exhausted midway through the gap, and since then, really, it's just been pulling back to gain liquidity off of that zone, in my opinion, right? Now, a couple areas I could have entered. Remember, I obviously could have entered here on 1120. Actually, I do think I entered here. Never mind. I think it was back here when it reclaimed it on 123. If you guys are in the Discord, you guys will see Pat and some of the other traders in here that kind of give their ideas. I think Pat entered in this area and got a nice bounce off of it, but I just didn't have the, I guess, the reaction speed, and I didn't have the conviction to add on a 1-bar pullback. But that gave a nice little bounce. Obviously, it ended up being a lower high. But I'll kind of show you guys something that's really interesting here. Obviously, it undercut that level again, but if we go to the weekly, you guys will see pretty much all the high volume is occurring at this low, right? Obviously, the big gap down, but from there, we had high volume with lower wicks coming from the bottom, kind of signaling that buyers are there. We didn't go much lower than that, right? Every single time we made a lower low, you guys can see it wicked back up on the daily and it closed back above on the weekly. But a lot of our higher volume came from these lower wicks, right? Then it rallied, it pulled back, based that, and we had a good extension off of that one with harmonic volume, as you guys can see here, and then just exhausted, right? So it pulled back into our level, right? Again, we ended up pulling down into that spot. We had a high volume tick off of that. We rallied back up, we had earnings, we sold back down. Once again, right, we had a high volume tick here, it didn't go lower, it ended up rallying. This rejection was on lower volume, and then it sold down again. And then our most recent weekly bar, or 2 weeks ago now, had high volume, but look how easy it retraced back through that bar and reclaimed 72.33. Now, if we tie this into the monthly, you guys will see multiple fake breaks underneath that just end up being lower wicks, right? And a lot of our higher volume is once again forming in these hammers or these large lower wicks that close back above, right? Very, very interesting accumulation schematic. Almost reminds me of the Intel analog, where Intel, I think, is ready to mark up in its phase as well. This should be eerily reminiscent of those 2022 ARKK stocks, right? I think this is pretty much the same exact thing. So Nike is a big focus. I love how it reclaimed 72.33, and really, it's kind of like the same AMD trade, right? Where I talk about how it reclaimed a level, and I'm willing to just risk the low now. So I think I'm willing to risk 68.62, and then take ads off 72.33. I would be able to DCA into this lower gap here, right? So dollar cost average, so just adding into it. Doesn't mean I'm going to add on the way down, but I really feel comfortable building an equity position off of this general range. If it does break underneath 72.33, I won't feel too much pressure, right? I'll barely be down in it, like percentage wise, but being comfortable adding into this little gap here, right? And then from there, I want to be able to hold this into earnings on 320, and from there, I think we could get some kind of nasty markup, right? Maybe it just extends off of the screen line, but if it does pull back down, I would expect something like this, and then a markup either back above this footprint candle, this major earnings candle. I think this was our accumulation low, right? So kind of our buy climax, or sorry, sell climax. I think we get a move back above that, maybe a base there, and then we're looking for a move above 80. If it can hold 80, right, I think we can really start to trade up into that 85 gap. So with that being said, I'm pretty comfortable grabbing shares here, right? I think I can grab shares. I might start some options positions. I really haven't looked at strikes yet or expirations. Once again, everything that I'm looking at is probably going to be into summer or kind of winter of this year. So just off the top of my head, some Julys, maybe August, even Octobers if they're cheap. Looking for 80 to 85 calls, right? That's kind of what I'm looking at. And then building a share position as we make our way down. Final adds on the options would be at 70, and then overall risk would be at this low here, right? So very, very simple trade I think that we have on hand. Yeah, and just kind of letting this create its own pathway for a move back up. Obviously 77 would be first target, 79.86, or just round it to that 80 level, and then obviously we're looking for this to mark up pretty extensively to 85 to 89, which is this more imminent gap. And then ultimately, I would love to get this up to 94. If we take a look at what that would be, if we have our kind of our entry here, just round it out to like, 72, and we were able to get an equity move all the way up here, right? That's a 22% move via equity, and over a period of time, I do think we can get to 94, which would be about a 30% gain. And you guys know, right, this has plenty more room to go beyond that. Gap is unfilled all the way up here to 100. If we're able to hold that through, man, this would be a pretty nasty gain, guys. Like, this would be disgusting. That'd be almost a 40% move via equity. So I really like Nike, guys. I really do like Nike. I think this and Intel pretty much have the same analog or schematic. And this reminds me a lot of the 2022 ARKK names in their preliminary phases. So really excited for this name. As I've said before, right, it really just didn't give me enough justification to add in when it pulled back here. It was a one-bar pullback, but it reclaimed that level once again, and it's done so on pretty much breaks under that level with low volume reclaims, and the breaks under have always resulted in large lower wicks with a close back above on the higher time frames, right? So I think this is a higher time frame trade, which is why I'm extending out my expirations. I'm willing to add shares. I really think this is going to be a big, big play, and I think it's finally set up. So I'm very excited for this one. Yeah, this is one of the top watches that I have. Let's jump into MU now, and then we'll jump into some Intel. Okay, MU's been our love child for a long time. It's been really good to us, and for the most part, it's been kind of a difficult trade since it kind of broke down out of this range here, as you guys know, this little highlighted box. But overall, right, this chart looks once again very good, right? It broke back above this range, and then more recently, this little gap that we have from 213. I'm sorry, this gap from 127 and 124, right? It had this gap down, built out a little reaccumulation range, and then it broke above and it gapped, right? So very important not to chase that gap. I was pretty specific on that. Hopefully everyone is aware of that, but just looking for a pullback here, right? This is a very easy pullback if it can pull back and base not only this gap that we have here from 213, but re-base this range, right? This range has been so important for a very, very long time. And it's not even just this little range here. If we actually jump back just a little bit, we go to the weekly chart. Hopefully you guys, actually just go to the monthly. Hopefully you guys remember that it's actually tied into this spot back here. It's these old highs, right? If we kind of just extend that through, you guys will see now that we make our way down to the daily chart that it's basically right at this 95, 93 spot, right? So very, very key spot on the monthly, and it has a very key correlation with the daily chart as well, right? Very, very simple confluence here, and it's important just not to chase this candle just yet. I would love to get that pullback, and if it can base 95.77, I did mention that I will add probably into the Junes again. But I think I can start some 105 calls, right? So 105 would be a simple target for this gap up here, right? So getting a nice bounce off of that spot, ideally moving up into 103, and maybe we can get an extension beyond that, right? And kind of move through into this gap up here, which is around 109, right? And if it does that, I could see this potentially selling off again and then holding equilibrium here, which is like the midpoint of this range. And I think that could take us into earnings and then maybe have our markup through there above 115. 115 is really a huge spot on this chart if it can claim back above. Now, the one thing that is still a little frustrating about this one, as you guys have seen, right, it filled this lower gap here from 1.3, obviously kind of accumulated in this little spot here, but we have not filled this gap back here, right? I think everyone's just waiting for 81.5. I don't even know if it has to do it, guys, if I'm being completely honest. I think the one scenario I could see is an earnings miss, and then this thing just capitulates down into 81.5. Could that be a spring? Absolutely. I did say, that I would add a majority of my shares here, and then ideally it starts to just kind of truck back above and reclaim, right? And ideally gets back above 95 with some time. But yeah, I'm kind of prepared for that scenario. But I like the risk here. I mean, I can't ignore the setup and the reclaim of this old range here. This is such a big spot, right? Not only from more recent time frame, but historically, like I showed you guys, if you go back to the monthly, that's just such a big spot. So yeah, once again, just hopefully this pulls back into 95. I'll look for 105 calls, and I'll start to take some of those. Although I won't go super heavy. I don't think this is just A++ just yet. But I do think it's worth some exposure, maybe 5 contracts, 10 contracts or so of those. And then, yeah, just kind of holding those. If we do get that pullback into 81.5, as I said, I would add shares, but I'll probably add they'll be really cheap at that point, the 130 calls for June at that point, and I'll size into that pretty heavy. But yeah, that's pretty much it for MU. This chart still looks really good. The weekly, as we've said before, it's just a massive cluster that's really been building off of that monthly level. With obviously it pulling down into gaps and seeing some high volume off of that, as we've seen here, right? Pretty much the same schematic that we see over and over with a lot of these accumulations or buildouts for moves higher, right? They end up kind of selling down or gapping down. We get a large lower wick with higher volume, and then we end up marking back up. So this chart still A+ in my opinion. And I really think it's 100% worth a stab. And if we even take a look at the monthly, right, this candle here with how much volume came in and that how extensive that wick was, the fact that we've recovered back above that is pretty telling, right? It's indicating that it doesn't really want to go lower, and that the wick here was really just to get fills at the lower levels, right? So still absolutely love this chart. And I'm prepared to add if we can get that pullback. But for the most part, as of now, right, a lot of my stuff has just been shares, as you guys have seen, right? Initial share adds were here, added some more shares here. Yeah, this is a two-pronged thing where I think we can really get shares and options. It just depends if we can get the pullback. And yeah, that's pretty much it for MU. Nothing much has really changed on this one. So fingers crossed, guys. Fingers crossed we can get a pullback for some 105s. Right, Intel, pretty simple here as well. A little bit ahead of what we showed with Nike, but it doesn't mean we're late to this one. I wanted to put a large emphasis on that. It just kind of confirms what we've been talking about, right? Where we saw basically this floor being built. We saw a pop, right? We ended up kind of breaking back down. We saw another pop over the high. Almost picture perfect Wyckoff here. We just never really got a spring, right? And it doesn't always have to have a spring. And it's indicative by the volume kind of showing its hand here with a breakout back through to these highs, right? At 24, hasn't gotten to 26 yet, but I really think if this can just pull back a little bit more and base this little high here from 121, and also, right, maybe nicely tie into that 2198 level, which is our footprint candle from back here on A2. Once again, this is like my sell climax. I think we can get some kind of pullback here. Right, I think this is a good quality add to get a nice position here and then look for that markup, right? Obviously, we want to get back above 24.59. If we can pull back 24.59, I think that we can get some kind of creek jump through 26, base 26, and then make our way up into 29. Hopefully, I don't have to go too deep into this one. I've been talking about this one forever, but just kind of jumping out to the weekly. All right, this little 24.59 spot that we rejected was obviously a rejection point, which is why I never wanted to add this. This was an old floor from back. I don't know what year this was. 2022? Yeah, so the bear market lows essentially. We kind of got a little bit of absorption here in September, and then a little bit more absorption here in November. Nice to see the confluence of volume though. We saw obviously I think this is the finalization of the accumulation. We clearly marked up. So now it's about kind of riding that. And as long as we have divergence and some kind of pullback off an applicable level, I do think this is a very quality trade. If we jump into the monthly as well, I mean, all that volume coming in here at the lows. Same exact setup that we've seen for a lot of these accumulations, right? I don't have to talk too much onto that. But yeah, I think this is a very quality setup still. I don't think we're late to this one at all. Just need to get that pullback. So one of those things where I don't think I necessarily need to take shares on this now. Um, do I even need to bring up the share thing? I think I've already talked about this one pretty extensively, but yeah, I had my entry here, right? As you guys know, I was risking the lows here at like 1884. I was just upset that their earnings, because the earnings, if you guys remember, actually popped it above. I think it was 22. Maybe it hit 24. I don't remember. It had a good move, and then it sold it down, right? And then you guys remember the next day we kind of had a bearish engulfing, and then we pulled all the way back down to 1884. I just didn't want to sit in this chart any longer and have my cash just sitting in what felt like a dead stock, right? We gave up a lot of progress, and that was the only reason I really stopped out of this one. But now that it showed its volume, right, it shows kind of its hand here and confirms that what we believed. As long as it pulls back on a divergence and it can hold this level here, like I said, from 2241 to 2198, I do think this is a quality name to add back into. Yeah, and then just kind of tentatively risk 2198. Or if we want to, right, we can just kind of use our EMAs here as kind of like a guiding hand, right? We have our 9 here, kind of pushing up, which will really nicely coincide with that 21 to 22 level. And I'll probably just use the EMA as kind of like my guiding hand. So that's pretty much it for Intel. I don't need to go too deep into that one. What else do we have here? Google, I'll just tie these both in together without an edit. Very simple chart here on Google. I don't know if this is ready just yet. I've already kind of brought this up. But yeah, this name looks super good. We obviously got the gap down. I mentioned this is a Pelosi stock, and really one of the undervalued tech names, right? And we talk about this. I deleted the level, but going back into this gap here, we can see this was our kind of our high here. It pulled down into that spot as well as this gap from 1210. So nice little confluence there. We're getting some pretty tight action, which is, oh crap, I didn't mean to do that. Which is why I started a position, and I really don't want to add again, right? We're kind of in purgatory here, right in the middle, where I felt like it's okay to start a position because it could rally. But for the most part, I'm saving a majority of my ads if we can get down into 175.37 and just fill this gap. I think that risk reward would be immense, right? That would be a very, very quality trade, A plus in my opinion. But as of now, I'm just kind of waiting. But if we can get some kind of break through this spot here and claim this earnings candle low, which is obviously our footprint candle low, I do think that there could be the opportunity to add and roll, and then look for a move up into this earnings candle high, and then from there obviously look for a breach of that and then kind of make its way progressively into the gap here. What would that earnings candle high be? So 192.75. So that's kind of what I'm looking for on this name. Once again, I don't think this is like the top setup. I still think that that's kind of reserved for MU. That's reserved for Nike, Intel, but this name definitely has opportunity to give a really nice payout, right? And so I'm just kind of being patient with this one. And other than that, right, I really don't have too much of an update here. If we jumped out to the weekly chart, looks pretty good, right? So if we jump to the weekly, we saw somewhat of a hammer here, so there is some kind of indication of buyers being willing to stop the sell pressure. So that's always good to see. It just didn't have the volume that I would have liked, which is another reason I didn't add. As I said, we're in purgatory here, where we have the gap below where we want to have cash on hand to be able to add into this one to maximize our multiple, or if it can break above that earnings candle high, right? Or I'm sorry, the low of that candle, I apologize. I think we can roll, right, and then safely risk down here, right? So pretty simple trade in my opinion. And then we're looking for this to move up into 206, which is that gap a little bit higher, right? I think is that the actual level? Yeah, so 206.38, which is the close, so that's the full gap fill there. Um, and that's really it, guys. I mean, that's honestly all I really wanted to cover. I'm trying to keep this as quality as I can. As I said, right, I have one setup where I do have a lot of cash that I'm going to be reserving. It primarily shows its hand on SPY, QQQ. It does show itself on some underlying equity names, but I'll let you guys know in the high confidence chat or a little section that I have when that shows its hand. I'm not going to ever teach that, unfortunately, because the win rate on it's pretty absurd. But I will let you guys know when I see that. But as of now, right, a lot of these are just going to be really, really slow. I don't want to say slow because they could play out really nicely, but I think the size is mainly going to be reserved for MU, Intel, Nike, and then yeah, just kind of waiting for that setup to show its hand, and then that's going to be a lot of my size because I really think that I can double, triple, whatever allocate into that position, and yeah, those are just fun trades. But right now, I think that's all I really wanted to cover. I'm trying to think off the top of my head. Oh, there was one on DKNG. Sorry guys, I'm kind of brainstorming just on off the top of my head. DKNG had a really nice gap up, obviously on really high volume. I don't have any intentions of chasing this, but if it can get a pullback off of these highs, which may not happen, off 49.57, that could be a nice bounce trade to maybe get it back to that high, or maybe it gives us some kind of lower high where we can, scale out. Doesn't always have to hit a new high, but if we can get some kind of pullback off 49.57, I'll have alerts set just to kind of keep my eye on this one. But DKNG is a very, very interesting setup that I obviously wanted to keep my eyes on. But other than that, guys, that's pretty simple. Nothing super crazy. Really, MU, Intel, Nike, Google are the primary ones. I have shares on Tesla. If you guys participated in that one, I know I took that trade at like 2 a.m. But yeah, I have shares on that one. I've had shares since like the 150, 140 range, so I'm pretty much set on Tesla. What else do I want to cover? I really think that's it, guys. Let me cut this real quick and take a look at my notes. Yeah, okay, so that's it, guys. I just wanted to jump on. I'll cut this all together. That's really all I'm looking at. So if you guys have any questions, always feel free to DM me. I like to kind of, obviously when I put this out, I will respond to DMs and kind of check that out. If you guys have any questions, just put them in general chat. I know me and some of the other, I would say more tenured traders will be able to answer. But yeah, that's really it, guys. Try to keep your heads high. I know it's been like I said, a very hard beginning of the month, but really I've kind of established where if we do sell, I do think it's just an opportunity to add in long going into that window right between February OPEX into March OPEX, and I think March OPEX on will really kind of push the market higher, to be completely honest, and I really think there's a good opportunity in the names that I've mentioned. So that's going to be it for the weekly scan. I hope you guys have a good night. I hope you guys enjoy tomorrow off, and I will see you guys on Tuesday.